And if you bought emerging market stocks in the past 6 months, well, you're sitting rather pretty. But have shares from Brazil to Russia gotten too expensive? Courtney's back focusing on this at this hour. Courtney.
Well, the last time emerging market stocks were this expensive, Carol, October 2007. But keep in mind, right after that gain, the MSCI Emerging Markets Index began a 12-month drop that erased half of its value. Well, right now, the MSCI trades at 15.5 times earnings compared to 14 for the S&P 500. Well, when developing nations last commanded a premium like what we're seeing right now, back in 2007, the Emerging Markets Index sank 54% in the next year. As a result, lots of investors saying shares from China to India to Brazil are just way too expensive. And they're already starting to show a lack in confidence that the rally will continue. The MSCI Emerging Markets Index dropped about 8% from its 2009 high from June 1st through last week. And emerging markets funds had $540 million of net outflows in the week to July 8th, the second time in 3 weeks that investors withdrew money. And that comes from EPFR Global, which tracks funds. Romain Boscher, who helps oversee $119 billion as a director at Groupama in Paris, says gains came too quickly in the context of a slow economic rebound. Valuations are now high, and that leaves the door open for a drop. So emerging and developed markets are at risk, he says. But the long-term outlook's a little better. BlackRock's Bob Dahl projects developing market equities will be the most attractive stock of investments over the next few years, even though they may lead a short-term retreat, Carol.
All right, Courtney, thanks so much.